Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in today's free video, I wanted to spend a little bit of time talking about Dollar Tree. So, Dollar Tree is set to report earnings on Tuesday morning before they open, and if we want to start taking an option trade on it, we'll have to start positioning ourselves on Monday. Typically, I like waiting until the end of the day on Monday, because if you're going to use the expected move to try to get a feel for where should this underlying open up or what is the range, well then you need to know the closing price. The second part of that is I like to see if implied volatility can creep up into the end of the day and hopefully give us a little bit better prices to sell some options against. So I'll wait until Monday afternoon to see exactly where the stock is trading, but then I want to start getting positioned for it. Dollar Tree does not offer weekly options, which is generally one of the main things I like to see when setting up an earnings trade, but this one was interesting to me for a couple of other reasons, and let's look at those here. The first of which is you might be able to look at this and make the case for an inverted head and shoulders, which is the big pattern that stands out here to begin with. The other thing that I think is very interesting in this chart is that if we're going to consider the 60-31 being your primary low, then I'm going to draw something like this and start to create a campaign swing. Basically, this is the last movement we've had that has been in favor of the bulls, and it's the action that I find to be most interesting. If you come in and hide your studies, this is a nice feature on Thinkorswim that will just make it a little bit easier to look at price action in and of itself. And the move that I am most interested in is the decline that preceded the rally. So from this high of 70.46 down into our low of 60.31, we have a very nice example of what we're looking for in symmetry. So we're taking this decline that was the last thing that bears could really do to push this lower, and then comparing it to here. And you're saying, okay, I get that. If this is what it did here and it's what's done here, why is that important to me? Well, because from this move, the stock went on to add another solid, $25 to its share price. Can it do the same thing here? So, the fact that it's made very nice symmetry on that is the first interest to me. That's from the technical perspective. And then if we look at a few other things, the trend line break isn't that big to me. That's just one more thing that backs the idea. And then looking at this chart, this is a custom indicator that Eric has coded for us, and I find very helpful in these spots. Over the course of the past 20 years, Dollar Tree has gapped up 24 times, and it has gapped down 8 times. So, generally speaking, I'm going to give this stock the benefit of the doubt to the long side anyway. That chart tells me that, the weekly looks okay, and the daily has lots of bullish things going for it as well. Once we have all of this established, then we would come over and take a look at our option chain. This is where I like to look for where I have the most open interest, and as we've said, we're going to have 19 days on these contracts, so we'll have a little bit of leniency to see if we're right on the idea, but a couple of things I like here are doing something like buying the 77.5 and then selling the 87.5 against it. This will create about a 1-to-1 risk-reward ratio on the vertical, but instead of just doing that trade, looking at this to the buy side and then also looking at selling some of these 75 puts, because this is also where we see a good amount of open interest. So if I have a bullish opinion, I think this is a good way of staggering the trade. So you've got some good delta through the directional, a little bit of positive theta decay through selling the 75s. I would do these as a spread to help mitigate the risk of them. And then we have 19 days to see if we can, number one, stay above 75, in a perfect world exceed 87.5, and continue on in the trend that Dollar Tree has been performing. So that's how I'm going to look at setting that up on Monday afternoon. Hopefully it gives you guys some insights on how you can chart and track those for other plays that you're looking at. And that's what I will review on Monday for the free video as well. Another thing I want to make you aware of is the webinar that we're going to be having on this Tuesday. So that is March 1st at 7 p.m. Central. This is going to be with John, going over some of the strategies he's been using in a rather volatile market that we've been seeing here lately. And if it's something you might be interested in, I hope to see you there. So you guys have a great rest of your night, and I will see you at tomorrow's free video.